Hello, everyone. This is Lindsay Klein, the host of the Buy the Books podcast and founder of Great Bookkeepers Wanted, empowering bookkeepers and the businesses that need them. I had a great conversation today with the owner of a bookkeeping firm. One question that I asked her that brought up an interesting conversation was whether or not her firm did a book-to-tax reconciliation once the taxes were filed. And she told me, no, in fact, a lot of times we don't even get a copy of the tax return. I looked at her and said, girl, anyone that has followed me for any length of time, you know I am big on tying out every balance sheet item to a source document. There is no more important source document than the tax return. If our books don't tie to taxes, what are we even doing? If, for whatever reason, the client were to come under audit and the books don't tie to what they filed on that tax return, they could have a problem. It's a really important step that should be part, in my opinion, of every bookkeeper's annual workflow. I would even recommend, if at all possible, see if you can get that tax return to review it before the client signs it. That would be ideal. There is another reason besides just making sure the books match. You're also checking for accuracy. As much as I love our tax preparers, and God bless them, they do a good work. Thank goodness they're around for us. But they're human. They do make mistakes. Even machines sometimes don't get it right, as we know as bookkeepers. So we need to check it. We need to be that extra set of eyes on behalf of our client to check and make sure what's on that tax return is accurate. Now, you may be saying, I don't know taxes. I don't know if it's accurate. I understand you're not going to know every line item of that tax return unless you're a tax professional. But there's a lot of things you can check that would align with what you're already doing in their books. Mainly checking the balance sheet and the income statement. Now, depending upon the type of tax return that's filed, you may not have a balance sheet to look at, and that's fine, but you'll definitely have an income statement to compare. So you can definitely check, are the income numbers matching? Check the fixed assets and depreciation, does that match? Now, little caveat there may be a reason why the depreciation and fixed assets don't match, because sometimes they have books on a different schedule intentionally than the taxes. So you would have to make sure they actually want it to match. But assuming that they do have that on the same schedule, it should match. There is one specific client that I'm keeping in mind when I have this conversation, that we did this as we always did. We always asked for the tax return and we always compared it to the books to make sure that from our perspective, everything that we could deem it to be accurate. There was a client we had, it was an e-commerce client, and their tax preparer had filed their taxes on an accrual set of financials, when in reality they were a cash basis company, and even on the tax return it said cash basis, but the numbers that what they used were accrual. It resulted in them having their income overstated by over $100,000. And this was a small business. Their total income was about $500,000. So you're talking a 20% overstatement just because the tax preparer used accrual financials instead of cash financials. That's a huge mistake. And we, as the bookkeepers, are the ones that caught it. So they were able to amend and save themselves thousands of dollars in taxes, and the client had no idea. They didn't know what they were looking at. They didn't know what to check. So this is a way you can be a huge value add to your client. I mean, huge. So please be that extra set of eyes to them to check everything that you can and to verify the numbers that are on that tax return match what's on the books. And you may have to work on collaborating with that tax preparer. I would definitely highly recommend cultivating that relationship as much as you can. Help them to see you as a partner, not an adversary, that you're not questioning them, you're not up against them, you want to help. And as much as you can cultivate that relationship, the better. But here's some insight I did share today with this bookkeeper. I've worked for multiple CPA firms in my career, and the story is the same at every single one that I've worked at. And I will say generally in the industry, I think this is true. Most CPA firms, they literally have a scoring system for their clients. And I think it's A to F, if I'm not mistaken. I know for sure there's A to D. They're literally grading their clients. The businesses that we work with, the small businesses, typically they're going to see them as C or D clients. What does that mean? It means they're not a high priority. In fact, that CPA that signed the tax return is likely not the person that prepared it. In fact, they might have not even reviewed it. They may have just signed it. More than likely, that tax return was prepared by an intern or a first-year CPA out of college or someone much lower on the totem pole than that CPA. That's not always the case. I am totally generalizing and I understand that. I'm not trying to put everybody in a box. I'm just saying this has been my experience working at CPA firms. This is how it happens. So you want to check it, is the point. Please check it. Please be that advocate for your client to make sure that what's been filed with the IRS is actually what should have been filed, as much as you can with the expertise that you have, knowing that obviously there's some limitations there, but at least make sure it ties to the books. This is so important, so valuable to your clients, whether they realize it or not. But I think you can sell this to them, that I can be an extra set of eyes to look over this tax return with a little bit higher level of expertise and see if I catch anything. I mean, what client wouldn't want that? One thing that might be an objection from your Schedule C clients is that it's included with their personal stuff, which has their socials, their kids' social security numbers, all this personal information. In those cases, tell them you don't have to send me the whole document. I just need the Schedule C. That's it. You don't have to send anything else on that document to me. And that might put some of that resistance to rest if that's the pushback that you're getting from them. I hope this helps. Until next time, this is Lindsay Klein, founder of Great Bookkeepers Wanted, empowering bookkeepers and the businesses that need them.